All right. Hey, what's up, YouTube? Today we're going to be talking about a stock that's oversold, has a lot of potential to come back to test its highs, and that right now is showing a bit of consistent pattern, something that's actually doing much better than before. All right. So the stock I'm talking about is Affirm. So if you know about Affirm, they're a buy now, pay later. So it's a pretty good service as far as credit goes. It's an alternative to credit. You can essentially get the item automatically and set up a payment plan to help pay you off. Now with credit cards, typically a lot of people end up paying the minimum payments and never even pay it off, and end up paying a lot in interest. But Affirm actually kind of helps you set up a payment plan to pay it off on top of having their own interest. So it's a very profitable company. It's also a way to make expensive purchases become a little bit less expensive. So that's a bit about the company. But let's talk about the stock's patterns. I want to show you about right here. This is when I started watching the stock. It had a push up from 90 to 120 about, and this was off of earnings, I believe. This is when the stock initially started becoming very bullish and just making big moves. The market itself was kind of down during this time, so all eyes were on it when it was making such a big move. And then it got a price upgrade and I believe some partnership news with Amazon. And so over the course of a few months, you might have seen it that it was doing really well. It pushed up here, and then you would see a pullback, and then in the same day it would push way up and break new highs, and it did that for a while. And then approaching here, we had earnings about a week ago on Affirm, and with a lot of stocks you saw a pre-earnings run up where it would actually kind of get some hype behind it, and whatever happens on earnings was a separate part of what would happen to the stock. But we saw consistency, and it would raise up to earnings day. But this one had the opposite effect. I believe when PayPal first had their earnings and it went really bad, that's when it seemed to start to have a sell-off. But let's look at the 3-minute chart. So yeah, like 3 days in a row, it just started going down, crashing, not even based off its own earnings. This is typically a move you would see off of earnings, but maybe people thought it was going to do really bad, so it was the opposite of a pre-earnings run-up, where people were kind of preemptively expecting bad earnings. And so if you were in way up here, took all of this and you were holding and ended up being bad, you would have been down so much money, about $60-$70 per share, because it would have done this move on the downside. But it ended up having really good earnings. They hit on almost everything, I believe. They also announced about their Amazon partnership, that it was going to go exclusive for the next 3 holiday seasons, the next 3 years of holidays. So yeah, it came all the way back up, pretty much matched its high, held very strong through the pre-market of the next day. But instead of seeing a continuation like Roblox or something like that, it actually just fell right back down again. And my theory behind this was that a lot of people who were buying here were expecting that continuation, and when they didn't see it, everybody just fear sold off, and it ended up consolidating around 150, and it was kind of not making many moves. And then one day we had it sell off to about 140, and it bounced up to 160. I'm trying to find which day that was. I want to say that was here. That was the first day. Okay, so it sold off. People still weren't sure, and it had a big push up to 160. Still about $15 off the high, but we saw some volume come in, which is pretty reassuring. But here's where we're at now. Today it hit 142 off the break. I believe this is part of the NASDAQ. The NASDAQ and the SPY both went up, but it made the inverse play for some reason. And then the SPY had a second push midday, and it actually caught that push and went up with it. And then it held pretty strong up here above 150. So it was pretty interesting to watch. This is the first kind of day where it finished above where it started. So it's kind of good in terms of kind of going up. If we look at the 4-hour chart, it looks kind of crazy. If you didn't know that it had earnings and all this was the reason this was happening, it would kind of be something you want to stay away from. But since we know it had good earnings and it was just a fierce sell-off, it looks like there's a lot of room for potential for a recovery. So right now we're sitting at 150. Its highs were 176, and it's looking like it's starting to rebound. So it's a good point to potentially buy in, maybe, if you're looking at it. Who knows what the best point to buy in is, but it does look like it has some potential for a recovery here. And then on top of that, it got a price upgrade. So I think its new price target is sitting at 185. So it's $10 above its previous high. And I think the price target before that was 145. And here's 145 here. And it was hitting 175 while its price target was 145. So it's a very Good stock. The company just did very well on earnings, and the one thing I like about the earnings on Affirm and the company in general is that their earnings typically always sets up for their next earnings, or just in general for the next quarter, the next year. Um, Affirm is still very new, so they're having a lot of partnerships, and basically any basic bottom line news that any starting business would have um, is a big catalyst. And right now they're having tons of good partnerships. They have partnerships with Peloton, and they do their earnings in such a way where their expectations for the next time are going to be under control. They're very good at risk management. Um, and so, yeah, 2 months ago when they had their earnings that initially caused all this wave, they had their earnings set up where they showed it and it excluded Peloton. So all the revenue they made from Peloton was excluded from their earnings, and they still beat earnings, which is pretty crazy if you think about it. Peloton's their biggest, at the time, it was their biggest client or partnership, and they were excluding it on the earnings and still winning. And so Peloton was one of the reasons that this stock dropped, I believe, because Peloton had earnings and they were pretty bad. So that caused it to drop on one of these days here out of the three. But if you look at the previous earnings and you actually not just fear sold, but kind of pay attention to what the company is doing, they excluded the Peloton on their earnings at all. So anything Peloton gave them would have been just extra. So as long as they could hit earnings based on those other companies, then they still would have been fine. And worst case scenario, add Peloton onto your earnings and you're still going to be good. And so, yeah, so it bounced all the way back up here, but that continuation volume kind of screwed it up. Everybody kind of got scared and sold off. And I mean, you can't blame people. If they're holding long term, they're not going to be really paying attention to it. They're going to be just like, yep, okay, that's what I'm expecting. They're just going to hold till it goes way up. But people who are kind of short term trading this, or midterm, like a week or two or even days, as well as the day traders, if they don't see the volume going up, even if they believe it's worth it, if other people are going to make that move, they're going to lose money if they hold it. So they're going to get out and potentially wait for a better buy-in point. And the whole point of this video is I think this is a better buy-in point because we have good earnings and it's sitting about $15 or $20 below its retest of the high, and on top of a price target increase. So I think within the next week or two, or even months, it's going to retest this high, and Affirm can make big moves. So whether you're a long-term trader, long-term investor, or day trader, or even swing trader on the short term, look at this range that it has. Today it dropped all the way to 142. It's been pretty consistent on this pattern too, of dropping and then popping up again. So if you caught it from 142, you could catch it all the way to 153. Now realistically, you're not going to catch the very bottom and the very top. So you're going to play somewhere in between this range here. But the range that it's having every single day is about $8 to $10. So if you're investing with 1,000 shares or 100 shares, every dollar goes up. That's 100. That's that same return. So 100 shares, you have $100. If you catch like a $5 wave, that's a free $500, and it's making this pattern consistently where it's dropping and then popping back up. There's like a $3 range here, and then from here to here, it's about a $5 or $6 range. And it looks like at the very open, it's been selling off every single day. But I think with this new push up that it had today, it might have more attention. It was hitting the high tickers late day. So while QCOM, Roblox were hitting the high tickers, this was along right with it. So I think it's going to have more attention on it. Potentially people who are waiting for it to start coming back up and consolidate and start kind of recovering and having that confirmation of a recovery. This might be a point where people start buying in here. So something to watch. Some other things that I'm watching are over here based off earnings or just patterns. I might make a separate video on my watch list, just kind of explaining why they're there, in case you're curious or need to update your watch list. But these are some pretty good stocks over here. But yeah, Affirm is one that I really like because of the company. And I'm a strong believer that to have a good trading day, you want to have at least one very consistent stock where you know how it's going to kind of behave. And then you can afford to kind of take smaller risks on the side when you have one that you know how it's going to perform. Because if this is making you guaranteed money, well, now you have a bit of a cushion to kind of hold losses, potentially wait for them to recover or whatever you need to do. But having that consistent profit's always nice. And it allows you to kind of play smaller stocks or cheaper stocks, buy heavier in other places if you're making money here. Or if you just like playing consistent and small and just keeping them very small, you could do that too. But I like Affirm because how consistent it is. You see this pattern here. This went on for like maybe weeks or even months. And nothing really happened to where it would sell off. So it bounced up here off of good earnings. And I mean, it had exclusive Amazon partnership for the next 3 years. So if you're a long-term trader, it has really good upside. I mean, it might hit that price target of 185 very soon and have a new price upgrade soon. I believe so. Yeah, that's about it. Comment anything you have about Affirm, or if you're looking at other stocks, maybe other stocks that had good earnings but for some reason sold off. This is very unusual to me, especially that pre-earnings. I guess you would call it a rundown. I'm used to call it a pre-earnings run up, but yeah, this was a pre-earnings run down, and then it anticipated probably negative earnings and had good earnings. So yeah, pretty good. Still a lot of upside there to retest the high. So that's going to be it for this video. Thanks for watching. If you did get anything value out of this video, I'm just starting, so if you do like it or have any suggestions, leave them in the comments, and I really appreciate if you like the video. And until next time, I'll see you.